Hello, everybody, and welcome back to the Essentially Explained podcast for another video here on the channel, talking about the wonderful world of economics. And well, this isn't the first take. We will have to admit.
Martin's ruined every single one up to this point.
No. Shall we have a little word about what you mentioned?
No, we won't have a little word unless we need to.
Well,
In
it's
which
probably
case,
for the best. Otherwise, that probably would get us taken down rather quickly.
maybe
To say the
you
least.
take it down.
But yes, today we will be talking about. Well, first we're going to start with something that's rather uneconomics-like. So we'll be talking about the European Super League, and I promise there is some economics link there, and we will discuss that later on. But yeah, today we're sort of starting with something that's, I guess, got a slightly wider reach because, well, I guess it's definitely no secret that football definitely appeals to a lot more people than, say, economics does or finance. They're rather different target audiences, although there is some overlap.
Not to Americans, mind.
No, of course not.
Or finance people, for that matter.
No. But yeah, so basically what we've got, as we usually have, we've got this article. So we'll sort of start with it as a sort of, I guess, overview of what the European, I guess for those of you that don't know what the European Super League, we'll give a sort of A to Z of what it is. I'm sure Dan will give his fiery opinions about the whole situation. And then after that, we will get into the more technical stuff. So maybe if you're here for just the pure economics, maybe I'll put like a timestamp or something in the video, and I'll just get to that because the first half of this video is going to be more, I guess, well, not really a general rant because there will still be some links to banking, but it will definitely be more of a casual take on the European Super League.
I was going to say, Martin, it's Friday evening. The only people that are here are the people that want the pure economics.
Oh, if you clicked on the economics channel, you're just asking for it, aren't you? Really?
On a Friday evening,
yeah. So, without further ado, let's get into the article. So, the article talks about JP Morgan, who are one of the largest banks in the world, up there with other massive corporations. So obviously you've got HSBC, another massive bank that operates internationally. And then basically what's happened here is we can talk a little bit maybe about the negative PR that they've got from this. So basically what happened is there was this whole breakaway league proposed from the traditional domestic, I guess, Premier League, or French league, or what other domestic leagues they've got, basically, the respective leagues, and obviously the Champions League, which is in footballing world like this international competition. So essentially, this was obviously frowned upon not only by the fans but also by the government and a number of the footballing governing authorities, and basically the European Football Super League has died a quick death. I was about to say slow death, but it literally was proposed, and within 2 days, all the clubs, or from what I'm aware of, all the clubs have backed out. Proposals.
Oh no, except Barcelona and Real, they're still in it apparently.
Oh yeah,
the two clubs in financial trouble.
Well, yeah. What? But who are they going to invite? Grimsby Town, you know.
It's just an El Clasico and Grimsby.
It actually reminds us of because if you guys know, maybe if you're watching Football Empire, you would know about Football Manager, and Dan and I have this sort of friendly competition in the summer months where you have all the transfers and everything, and
I've won it twice.
You've won it twice, yeah. So usually we have our respective clubs and some, I guess, smaller teams in there that, well, what you'd expect us to beat, but you know, I'm pretty hopeless.
Martin didn't get you through to the final one year, I'm pretty sure. I'm pretty sure you got knocked out in the semis.
Yeah, I think I got knocked out by like Reading or something. Yeah.
I was Newcastle, yeah, well done.
Oh yeah, I mean, you know, Newcastle. That was a well, probably only one of the only saves that I've not resigned or been sacked from. So, you know.
Yeah.
I'll take that as a sort of positive slant, I guess. But yeah, so basically the backers of this have had to basically apologise along with the club owners because of the horrendous PR it got. And basically what they were planning to do, they were planning to um, underwrite, and this is where we can, before actually we'll get some of Dan's thoughts about the European Super League as well, but basically they were planning to underwrite a 3.25 billion euro grant, which would basically have acted as a start fund in order for these rebel clubs to be able to launch the breakaway contest, because a number of these clubs are in massive financial debt. So Dan, maybe you can talk to us, well, firstly about your thoughts about the European Super League, just as a pure footballing fan, and then maybe after you've had your little rant, we can maybe do a quick segment.
My little rant. Well, my views don't differ from anyone else, really. It's disgusting. However, when I found out that my team would become 2014-15 Premier League champions, were them clubs to be kicked out and banished from the from the English Premier League, my ears started to turn up a little bit. That's not bad. Come on, we'd have a Carabao Cup to our name. We'd have a Premier League title, runners up the next year. I mean, we'd have at least 2 more trophies in the cabinet. I mean,
yeah,
no,
no
one, no one likes it. No one wanted it. No one supports it except 12 morons, really. Well, not morons for themselves because they see the money, but they were just in it for the cash, and they didn't really consider the wider footballing pyramid. Maybe in a league like Spain or Germany, in Germany weren't in the case, they weren't involved in the case, but maybe Spain and Italy, where the league isn't quite as competitive, I guess. You can pretty much be guaranteed most years that the same team will win most of the time, or the same 2 teams at least. Maybe they felt the need that a new European competition, which could hoard more money, was necessary. They wanted a tougher challenge, they wanted more cash, but they don't realise that the Premier League, give or take, is a fairly competitive league, isn't it? You normally get a new one every few years, and the Premier League dwarfs the size of most of them other leagues financially, 2-1 in a lot of cases. So we value our footballing pyramid in England. It's not like America where you have a Super Bowl or you have a conference where you can't get relegated. We actually like the idea of a competitive system because, as Pep Guardiola said, if there's no threat of relegation, well, it's not really a sport, is it? It's not competition. So, I couldn't agree more with that. Economically,
yes.
Well, there was the idea floating around that this could be turned into a proper franchise like you see in America, and so you would have, digital providers like Disney Plus, or other streaming services like Amazon potentially taking control of the rights for this broadcasting this competition, and so you could make billions and billions off it, let alone the underwriting provided by JP Morgan. So economically, there's a huge incentive there for the big clubs, even particularly for clubs like Arsenal and Tottenham, who we all laughed at when we found out they were part of the Super League. As Gary Neville said, I don't know quite how they've managed that. I'd rather watch, the San Marino champions, maybe the Gibraltar champions, I don't know. They've got a huge incentive financially to enter because, of course, they're guaranteed 200 million quid every season, even if they were the worst team in the league, which you can almost be sure they will be. But for the rest of the world, the rest of football, what you risk is essentially a monopoly, don't you? Concentrate in one league. All the domestic leagues would die out very quickly because even if the big 6 were to stay in the Premier League and the other teams to stay in their respective leagues, they wouldn't treat it as much as sort of competitively as they would now. They play reserve squads. Broadcasting sort of rights would plummet in the Premier League and elsewhere. Commercial revenue would fall in place this new league. So there really would be catastrophic effects for the general footballing industry in the UK and worldwide domestically. But this super competition would have handed a lot of monopoly power, certainly.
Oh yeah, I mean, I don't think it would have entirely killed off domestic leagues, but you wouldn't, footballing like pyramids as we know known today wouldn't exist. I think what we know as the Premier League these days would be more like League One, maybe reverse football like 50 years. Obviously, there would be less.
More competitive.
Yeah, I'm not arguing that. But yeah, I think a lot of clubs would suffer, would go under as a result. Um,
Definitely the lower clubs in the pyramid. I mean, League One, League Two, and Championship, and even Conference and below clubs have it hard enough as it is, even with this system, which grants them some sort of transfer of revenue, even with COVID. But can you imagine if the Premier League Big Six suddenly left and you haven't got all that revenue being pulled in anymore? I mean, I think a lot of the clubs would go under.
well, yeah, I mean the big six clubs definitely bringing in a lot of casual viewers and fans.
Yeah, they probably outrank all the rest of football fans in the UK
Well,
just with M6 clubs, probably by fan size, I'd have thought.
well,
Um,
they're the most lucrative fans at the end of the day.
yeah,
If anything, the clubs, the big six clubs anyway, clearly don't want the core uh, fan base because obviously they're the most vocal in these sort of situations. And the casual fan base wouldn't care so much about this sort of European Super League. So they would be making, they'd be the owners would be rolling in the money.
oh yeah,
I mean,
oh yeah.
if you guys have listened to the European Super League theme song, then you
Money,
know
money, 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 money. Let's see the money.
Yeah,
Yeah.
no, it was just a terrible idea, and
Oh
just
God, it's got
return.
this horrible view of Daniel Levy just naked in a bath full of dollar bills. Ugh.
I mean, I still stand. There was that poster that was released, wasn't there? That where he looked
Oh,
like some sort of London gangster.
yeah, the GTA one, like the Grand Theft Auto, but like this, yeah, they basically took the piss and said it was these 12. Yeah, that was quite funny. Yeah, we'll have to find that.
Maybe I'll put that as a thumbnail or something.
Yeah, do it.
But no, I mean, returning it sort of back to the US Bank. Obviously, they would have got a lot of if the Super League had actually gone through. They would have obviously, I'd imagine, would have benefited from. I guess it would be sort of an early sort of form of lobbying because they'd maybe get some deals with the Super League for future financial deals, which is obviously good. Obviously, that would have given them more customers for JP Morgan, which is always great for a bank. And also, maybe we should talk about this. I don't think we really talked about it that much, but what underwriting a grant actually means. Sort of moving it away from the pure footballing element. So all the football fans now are probably sighing and turning off right now.
Yeah, absolutely.
This is where the sort of, I guess, pure, well, not pure econ. We'll perhaps sort of return to football at some point at the end, but yeah. So what does underwriting a grant actually entail for any bank, I guess?
Well, no, he's using me to do the definitions here. Let's see if he knows. Well, I guess we think of underwriting mostly when you hear underwriting, you think insurance. So you think mostly in the financial sector, which is exactly where JP Morgan, Chase, I think they're now called, aren't they, operate. So if I try and keep using the example of JP Morgan and the European Super League, underwriting is basically a process when someone takes on the risk of a particular asset or a particular scheme financially in return for some sort of fee. So if that were to go bust, or if the scheme were to go south, and suddenly you've got a lot of people coming in for compensation, they would essentially provide and cover the risk for the clubs and for anyone involved in the process. So if this Super League were to go tits up, quite literally, well then JP Morgan Chase would essentially be the ultimate financial sort of lender of last resort, if you some central bank terms, essentially, and bail the clubs out. They take on the risk of this whole league financially, and that came through the form of like $3 billion, you said, of dollars of loans, essentially evenly distributed to all these clubs, to basically promote the league. But you might think, well, why would a financial institution underwrite something if they only stand to lose money if it goes wrong? Well, see, this is where sort of the incentive lies, as with most things in the financial institutions that we live in and we use. They provide some sort of fee for this risk. So because this is quite a risky investment, the European Super League, if had gone ahead and you would have seen heavy sanctions from UEFA and FIFA, it's likely that there would have been the risk of fines and disciplinary action, which could have hurt clubs. So they would take on a fee of essentially an amount of the revenue from the European Super League to provide that cover. And can you imagine the sort of revenue they would have been pulling in this European Super League? I mean, JP Morgan Chase would have easily made back their money, even with the risk of fines.
Oh yeah, they've been rolling in it. I mean, well, two things. The first of all, I just seen who chairs JP Morgan's International Council.
Mm.
Do you want to have a guess at who it is?
I heard that they did have a link to one of the top six. I'm trying to think who it was. Or was it Real? I can't remember. I
Well,
want to say
yeah.
Man United.
What?
Ed Woodward. Had a
Well,
link to it. I know he had a link to it.
they were
I'm
on
sure
the
you can
board,
work it.
and I think the guy spearheading it was the Real Madrid Florentino Perez, I think is his name.
Yeah. Let me guess. Does he know someone on that board?
Well, I'm just reading here. So the person that chairs although he does state that he doesn't actually support it, Mr. former Prime Minister Tony Blair.
Oh yes, yes. No, yeah. I think that's in a very sort of ambassadorial sort of role. I don't think that's a very involved role. I think the International Council is more of a sort of like sort of think
Advisor.
tank.
Yeah,
More of a think tank sort of happy ethical side. I don't think that has a lot to do with the sort of investment banking division like we think of. But it's interesting, I guess. But yeah, I did read Ed Woodward did used to work for JP Morgan and Chase, I believe, at one point. I believe I'll have to double check that. But
well,
yeah, I
most
saw
of
that.
these owners have got, well, obviously they don't have necessary roots in football. They have roots in the financial sector, or any other, or have their own businesses, or what have you.
Yeah.
They don't really have a footballing link as such. And the other thing, which I'm just sort of trying to remember what I was going to talk about here, I guess the one way you could talk about like risk and return actually is thinking about like interest, right? So you would get obviously the whole concept of a low risk, low return. So I guess the safest sort of investment you could think of at a personal level is putting money into a savings account. You're pretty much guaranteed to get your return, unless obviously but even then, like deposits are guaranteed by the government. So you are guaranteed to get interest on your deposit, or the money you have in your savings account, and that's obviously low risk, but also very low reward. And then obviously, as you see higher sort of interest rates on certain investments, you'd expect them to be a higher risk of not getting that return. Essentially, I guess is the sort of actually, I think the thing I can think of that relates to most is like if you think of like payday loans, for example. So these sort of payday loan companies will charge a extortionate interest rate on individuals because there's a pretty high chance that they won't be able to pay it back, or basically won't be able to pay it back, right? So then they can charge these interest rates. Because there's such a high risk, or meanwhile, as I said before, with a normal sort of commercial bank, your interest rate would be much lower for a savings account. And I guess we can talk a little bit about what a bank does, but both like the central bank and commercial banks, because obviously they're both key to how an economy functions. So I guess then maybe like if we start with the central bank, because they're sort of the hub of the banking system, where traditionally where you'd have money being.
They are the Emperor Palpatine of the financial world. They are like the be all and end all. Or no, they're more the Senate, anything, aren't they? Before it goes tits up, before the Great Depression, they were like the Senate. I guess they're not really Palpatine after, but essentially they are like the big regulatory body of monetary policy and the overall financial sort of sector that we live in. So initially, the central bank, it just delved into things like controlling the money supply and basic monetary operations that we've sort of looked at in the past. But the central bank has grown now to become basically the most important regulatory body in the financial world. Really, it controls not just this money supply, but how liquid assets are. It controls basically the bank's like reserves. Each individual bank, that is. It controls most of the mechanisms through which banks borrow, and also it sets all the rates for things like how liquid a bank has to be, how much has to keep of its assets in case there's a run, for example. It basically acts as the government, but on a financial level. So it's the sort of lender of last resort and be all and end all of the financial world. It's the boss.
Yeah, so maybe we should talk about why all those are important, because we talk about a reserve ratio interest rates and quantitative easing, what does it actually mean for the economy? What does it, do? These are all just technical terms we're flying out with. So, I guess we could talk about. We'll start with the reserve ratio. So, as Dan said, basically how much they have to keep in liquid assets in case there's a run in on the banks, like we've seen in other financial crises, like I think in the Wall Street crash back in 1929. I think there was a run on the banks. Was it Black
Yep.
Thursday, Black Tuesday? I'm trying to remember.
One of the two, yeah. There were several runs of the banks, but that was the first time there's ever been a run on the bank, really, that we documented history. The first sort of big runs.
Yeah, and then obviously we've, as you said, where we saw that with the more recent financial crisis in '08. And obviously it's very important because there's a trade-off here. So obviously you want banks to not, run out of money, because that would be terrible. Without delving too deeply into economic theory, you don't want your banks running out of money, because that sort of grinds the whole economy to a halt. Besides the fact that the bank having no money is a problem in itself for the bank's own financial health. But on the opposite side of the coin, you don't want banks to be holding too much back, because you want as much sort of money and finance being pumped into the system. You obviously have to take into account inflation and all that, but I mean just in cerebus paribus, assuming everything else is constant, you want banks. I think the reserve ratio at the moment is what, 10%, is it? Or around
It depends. The Europeans tend to have lower reserve ratios than the US at the moment, but the US are even more sort of strict on their reserve ratios in general than the European Union and the UK are, I guess, because they're much more fearful of runs.
Yeah, and basically, if the banks are able to, the lower basically the reserve ratio, the more they can lend out to consumers and private firms, which is obviously great for aggregate demand. So, which is one way that central bank influences the economy through policy. Then obviously we've got the base rates. So what the central bank can do is they don't directly control the real interest rate. They control the nominal rate, basically, and hope that this will have an effect on the real rates. Now, there are some caveats to this. One is that I think it's Dan. You mentioned the European sort of method or methodology of monitoring monetary system. They've got like a flat. That doesn't, like the European Central Bank, control the base rate essentially.
Yeah, the ECB controls within the eurozone, that is, but countries like the UK before it left the European Union, other nations not inside the ECB include, I believe, the Netherlands. I want to say the Netherlands, maybe. Greece, for example, isn't in. Oh no, wait, Greece might be in the ECB. But yeah, Greece is inside the ECB. But nations in general, hold on, let me have a look. But the nations within the main eurozone essentially are all dictated by one central bank. But the UK is a common example. Poland, there we go. That's a good one. Okay. Poland is an example of a country that isn't inside the Eurozone, but is inside the European Union, but maintains its own independent policy. But yeah, the ECB controls the sort of monetary policy for the whole of the Eurozone.
Yeah, which obviously means that the central bank has, it means the monetary policy even is less flexible, because obviously they have to apply it at sort of a wider economic region. So, I mean, traditionally, the traditional theory is that if they can, a government will always prefer to counter a sort of economic crisis or situation, even. Maybe not a crisis, because in a crisis you want a combination of monetary and fiscal policy, in order to have the biggest possible effect. But let's say in a situation where you want to make a correction, monetary policy, when you have an independent central bank that can make its own monetary policy, they will prefer that to happen rather than obviously having to be delving into government funds, because that causes problems later on for debt and their own party's political outlook perhaps in the future. We talked about the nominal rate. which there is actually what I might do is if I in the description I might put a couple of the equations in, because basically what you've got is you've got nominal rate, you've got the real interest rate, and then you've got inflation in an equation. I'm trying to remember what way it goes round.
So it's real interest rate is the nominal interest rate minus the rate of inflation. So, for example, the real interest rate, if you think about GDP, if we say we have a growth rate of 3% but inflation of 2%, well, the real GDP of growth rate is 1% because 3 minus 2 is 1. It works the same way with the real interest rate. So if the Bank of England sets the nominal interest rate at 5%, inflation is at 2%, well, then 5 minus 2 is 3. So the real interest rate is 3%. It's known as the Fisher equation.
Fisher equation, there we go. There, I was literally doing this earlier. I just had a complete mind blank. You can tell it's been a long day. But yeah, so yeah, that's the base rate. We've talked about no, we haven't talked about QE. Sorry, we've talked about the reserve ratio, quantitative easing, which is, I guess, the new modern approach to monetary policy in times where you have near 0% nominal rates, which is in the case of a lot of developed countries like the UK. So quantitative easing just sort of cheers, Dan. Just reminding me of my mares, or number of mares I've had today, before the recording even. So yes, so the quantitative easing, basically this is in simple terms, we've talked about it before on the podcast, where the central bank will buy, you can buy government debt, you can buy financial assets, and essentially the whole idea is you're releasing like, you know, money in, or cash, or whatever term you find or use into the system, and hopefully this will have a positive effect on your AD. Although empirical evidence does show that even though the effect it does have is positive, it does have an effect. The effect by itself is quite small. So by itself, quantitative easing can't really be used to counteract a massive economic situation. As I said before,
Yeah, I mean,
go on.
if you're sort of a bit sort of brain dead like all of us this afternoon, essentially the idea of the QE and the base rate, as we've been talking about, is the Bank of England control the money supply, and that is mostly done through the rate at which the central bank lends to commercial and retail banks, which we're going to talk to now. So you remember, there's obviously a money supply in the economy, which controls how much cash, how much currency there is in the economy. The central bank will always lend to commercial and retail banks who provide money to us, and basically, obviously, the interest is much lower. Well, then they can lend more money to the commercial banks, and then lend more money to us. So it's basically an instrument controlling how much money is in the economy. And obviously, as we know, as Martin sort of hinted at there, the amount of money in the economy is an important determinant for growth. So if the economy is doing badly, well, the central bank will set a lower interest rate. So banks find it cheaper to borrow off them. So they charge cheaper interest rates for us to borrow off them, the retail banks, and then we can use them cheap loans to go and invest in things that generate growth. That's how it all feeds back.
Yeah, that's you basically covered pretty much everything there. The one thing I just remembered on the top of my head, actually, just quickly returning back to the sort of base rate, is actually the government central bank can basically affect government debt. So, and also it can affect like for your exchange rate even. So say that the central bank increases the base rate and you have a increase in the real rate. This will essentially make, in turn, high quality financial assets or products, like even government bonds, more attractive to foreign investors, and as a result, they want to buy, let's say, the currency of country A, in which you've had the interest rate rise. So the investors from country whatever buy this currency from country A. As a result, there's more demands, obviously, for that currency, and the value of that currency against all other currencies, or currencies at least it's being bought from, increases. So I just thought that might be another thing worth mentioning with interest rates.
Yeah, I think the central bank is sort of covered. So if we move down the chain, we're sort of now looking at retail, commercial, and investment banks. Martin, do you want to take your pick?
Ooh, we can do. I guess we'll start with like the boring one. So maybe we can do with retail banks first. So what we refer to with retail banks, they're not boring as such, but I mean just compared to all the other type of banks, I guess. So retail banks, I think of like what you got on your local high street, really. So well, they're disappearing from the high street, but traditionally anyway, you can walk into your, I don't know, Halifax or your Barclays on the corner of the high street, and this is your retail bank. Essentially, it's where you can obviously withdraw your money and put deposits in, or even get certain financial products, whether that be debit cards or even or even insurance in some cases as well. And basically, really in the wider economic system, they're not. I mean, obviously, they're still these days are still quite important, but they're not quite as pivotal to the whole system as, say, a massive commercial bank, or a financial or investment bank even. There are small individual branches are small fishes, even if they are part of a nationwide, a retail bank. Because they're catering mostly to individuals rather than massive corporations, where the real money lies for an economy.
Yeah. And then commercial banks. I mean, it's worth mentioning that we're going to mention these different types of banks, but often banks like Barclays and HSBC, they'll sort of won't be a distinct type. They'll do all three. So you don't often just see many just investment bank these days. You often see banks doing all three. But commercial banks tend to be the ones that focus on mostly strictly business investments. So they tend to be sort of like in the middle, if you like, for where they provide this sort of like the intermediate position. They don't work just for individuals and shareholders and companies and things, but they don't work just for the individual consumer as well. So they tend to sort of support sort of small and medium-sized businesses, SMEs, at trying to sort of grow their business, and obviously they have the financial benefit as well from that. They sort of take the intermediate position, and then we look at the other type of bank mostly as investment banks, and they tend to be the ones we're talking about here. So JP Morgan Chase, Goldman Sachs, and they do have a sort of business division where they look at expanding businesses, but they are really in it for the profit. Them ones, they tend to look at maximizing sort of profit from any way they can. So quite literally investing in, these days they invest in things like cryptocurrencies, but also of course like old shares, and they look at things called mergers and acquisitions. So looking at expanding firms and bringing them to other firms and sort of joining together, and they benefit financially. So basically they're the main instrument for gaining money and making money in the economy, and that's why they're so important here.
Yeah, at the end of the day, the banks are where the money flows. Even if like actually, that's something I want to correct actually from what I said earlier when I say that the central bank is the heart of the economic system. I mean that in the way, not necessarily in where all money comes from, because in reality, only 3% of currency in or even liquidity in the financial system or in the economies provided by the central bank. A lot more of it, as Dan says, is in the form of cryptocurrency, or is basically been made in transactions between commercial banks and other organisations. But yes, as Dan alluded to, the banks are essentially the most important organisations in an economy besides the government. But even then, there is an argument for and against that, depending on your stance and how big a role a central government should take in managing the economy, essentially.
Yeah, exactly. We have to be careful here, but yeah, the main reason why the central bank only controls about 3% of the money supply is because a lot of the assets or a lot of the liquid money in the economy is tied up in basically financial assets. So banks will borrow from each other and create, multiple financial assets out of the same stock of money, and that's why the sort of value is much, much bigger. So yeah, but there's ways you can influence all of that. So even if the central bank does increase the money supply, they're actually only going to affect directly a few tiny pennies out of a pound of the economy, if you think of it. But because as we're talking about this sort of transmission mechanism whereby this money feeds into the whole financial institution, it has wider effects for all the other bits of money and capital in the economy.
Yeah, and actually, one thing I do want to touch on before we wrap up for this podcast is maybe it might be worth explaining to the viewers why the financial crisis has such a widespread effect for banks internationally, even though it was based on a US housing market crisis essentially. So maybe that sort of explain. Maybe we can sort of explain the link, how sort of banks have become more, I guess, globalized. I guess in their role, within the global economy, they've become more important than cogs, I guess.
Well, that sounds like the sort of question you would like to answer, Martin. That's pretty much your dream 25 marker right there, isn't it?
I mean, I don't know. There's a lot to unpack, and I'm sure I think we have, in fact, talked a little bit about the financial crisis. So I'll spare the, copious amount of detail. But essentially, investment doesn't only occur, I guess at the most basic level, it doesn't occur only in the domestic markets. You don't have just banks investing in their own country. They're investing internationally as well. So I guess the one way I can think of explaining it is, so obviously you have, let's say, I don't know, UK investors that have got money in the US, whether that be investment banks or investing in the housing market in the US. Because there was a lot of confidence in the housing market at the time. You had this massive boom, and essentially when that all comes crashing down, this has not only an effect on investors in the US, but those international investors as well, because they lose out, and in turn, this obviously it causes, I guess, is it a butterfly effect? Is it where it sort of spreads out? International.
Yeah, I think that's the term.
Yeah,
You can think of it like a bubble, really.
bubble.
Yeah, there's some sort of effect. It spreads out and it tends to sort of like grow outwards until there's some sort of burst or some sort of pressure. But yeah, essentially it's like this butterfly effect that it tries to do anyway.
Yeah. So I mean, banks are, and even just talking away from the crisis more in the general role, they're obviously very important in investing in building, whether that be investing in creating local jobs, or like any, I guess, international corporation really, or actually I don't know, maybe so much the massive international banks, because this is another topic we might cover at a later point, is the idea of microfinance. And
Wow.
obviously the central banks don't delve into that too much. I don't think they do, unless they've got a separate, some of them have separate divisions to deal with that sort of thing. Because it's not traditionally as lucrative, because obviously your interest rates are not quite as high, your returns not quite as good, and then I think there's a higher risk of obviously it not being repaid, because you're providing these sort of small loans to individuals in communities that require it in developing nations. And yeah, as I said, it's something we'll discuss about at a later date, because it's rather interesting. It sort of is quite a world away from what we consider as the normal commercial banking world. And yeah, I mean, without sort of going too much further, because we've been going for a fair amount of time, and I'm sure Dan wants to return to the wider world sometime this century, because we've been trying to record this for quite a long time now. So understandably, we might be a bit tired. Hopefully you have still enjoyed the quite wide variety of topics we've covered today. So we started with football and this whole saga, I guess you can call it, and then obviously we've talked quite a lot about actually the various roles of the banking system, not maybe in super high depth, and if you want us to do more in-depth videos on each of these topics, then let us know. It would be great if we could get more interaction in the comment section, because that's sort of what we want at the end of the day. We want this to be a channel where people can sort of voice their sort of own views and opinions, or something interesting they found, and then have a sort of, I guess, intellectual discussion about it. And yeah, we'll. I know it's been quite a while since the last one. Hopefully, I should be putting this out sometime. In fact,
This
it's like
millennium.
this millennium. Yeah. No, this one I'll put out on the Saturday, so you guys should hopefully be seeing it on the 24th. And yeah, obviously, if you've liked it, then well, no explanation needed for that one. Just leave us a like, because obviously that helps us massively, basically, at the end of the day. And if you enjoy this content, or if return to the channel and find some of our stuff useful, or I guess entertaining, I guess, if economics is your source of entertainment, then yeah, leave us, subscribe to the channel. And Dan, you got any final thoughts before we wrap up for the evening?
I would like to find Jamie Carragher and Gary Neville and build a statue of them together.
No, they are national heroes, to be fair.
That's from the Super League,
Well,
yeah.
maybe not Carragher, because the whole incident with spitting on the child, but definitely Neville. Neville's definitely worthy of the statue for all footballing fans. And
Yeah.
I guess on that final thought, we bear you a farewell for now, until the next video, whenever that's up. So for now, goodbye.